Welcome to the December Luxury Market Report brought to you by MansionArizona.com. I'm your luxury real estate professional, Jeremy Poehls, and in this episode, we're going to take a look at the luxury real estate market in Phoenix, Arizona. The Phoenix single-family luxury market is still a seller's market, holding strong with a 22% sales ratio. Homes sold for a median of 97.14% of the list price in November of 2022. The luxury benchmark price remains at $600,000. Total inventory was 837. Total sales were 181. The price band with the most sales was $650,000 to $700,000 with 31 homes sold. The price band with the most inventory was $650,000 to $700,000 with 115 homes available. The median sales price was $775,000, up from $767,000 last year, a 1% increase. Total inventory is up 182% compared to last year. Total sales were down 44%, and the days on market were 64 days compared to 32 last November. Phoenix, like many other areas, is seeing inventory levels starting to decline. Much of this is due to canceled listings and sellers reluctant to put their homes on the market, as a new home would cost more due to the rising interest rates. It's this kind of tension or equilibrium that, for now, is likely to hold prices steady and not allow for the bottom to drop out. Yes, there are fewer buyers, but now we're seeing fewer homes available. If you want to see if this trend continues and to see the awesome luxury home tours we have lined up, make sure you subscribe to the channel and select that bell icon so you're notified when a new video is released. Now, for some insights on the greater luxury market from our partners at the Institute for Luxury Home Marketing. Taking the long view, markets continue to cool. The most notable trends in the current market are the continued decline in the volume of sales and inventory levels, as well as the number of new listings entering the market. To some degree, this is not unexpected as we head toward the quieter real estate months of winter. But these numbers are still reflective of a cooling market. Of equal notability is the large disparity between the median list price of properties still on the market compared to the median sold price for recent sales. This is true in both the single-family and attached property markets as the disconnect between seller and buyer expectations continues. While this disconnect is hindering sales in the market for homes that have been on the market for a long time without a price reduction, for homes priced correctly, there seems to be little downward pressure, especially as the average days on market remains in the 20s rather than the 50s and 60s typically seen in pre-pandemic times. More of a lull than a crash. Despite the decline in the number of transactions over the last few months, there are no critical signs of distress in the luxury market. Low inventory levels are containing the ability for buyers to lowball. Home values continue to remain fairly stable, and many homeowners still retain their low interest rates, so they are not yet feeling the strain of additional mortgage costs. Purchases during the pandemic were made to fulfill the need for a refuge and a space, and although these might not be the top priority in the current market, homes were mostly bought with long-term ownership in mind. While priorities may have shifted, the ownership mindset has not. The affluent are content to look beyond the short-term turbulence and focus on future opportunities, whether that is 1 or even 10 years away. Hence the reason we see a much lower percentage of highly motivated luxury sellers in today's market. Although we have seen prices fall modestly during the last 4 or 5 months, prices remain at near record levels across North America. And it is unlikely that a significant decline in home prices will happen unless there is a drastic change either in the economy through a recession or a huge increase of new inventory. Reevaluating expectations. All markets tend to be cyclical, so it was not unexpected to see the return of more moderate conditions earlier this year. The major difference was how swiftly this change occurred, as the impact of a weakening economy took its toll on the luxury market. Buyers and sellers must now simply start to reevaluate their expectations in this cooling market. The rush is over, as is the likelihood of fast investment returns and unfettered selling and buying of luxury homes. The cost of borrowing money will likely remain at higher rates for some time, so homes will need to be purchased with a long-term view in mind. That being said, the last few years have left their legacy for the luxury market. While it might only represent a small percentage of the overall real estate market, luxury home ownership's influence is growing. Not only has the purchase of homes valued over $1 million tripled from 2.6 to 6.5 since 2018, but demand for multiple luxury properties has soared over the last 2 years. This phenomenal increase has been driven by a growing affluent demographic who consider owning a luxury property a necessity in their asset portfolio. All indications are that this trend is here to stay, albeit that demand is set to return to a more sustainable level. Investment returns will slow. Return on real estate purchases over the last 2 years has been incredibly robust, driven by strong demand, cheap debt, and government stimulus spending. According to a recent report by PricewaterhouseCoopers, the total return on real estate soared over 20% in the 4 quarters through to mid-2022, which is 3 times the 20-year average. However, PwC expects these returns to slow to 3.8 in 2023, with a moderate recovery to 7% in 2024, primarily due to higher interest rates and the cost of capital borrowing. They also remind us that the last 10 years of low interest rates are, in fact, not the historical norm, and that these current higher rates will result in more moderate returns once more. Uncertainty continues to fuel hesitancy. The biggest challenge for both sellers and buyers is the uncertainty on where prices will settle. Should they sell now when the market is less favorable, or wait to see if the market improves in 2023? Buyers are equally concerned, not wanting to pay current prices if they believe the values will trend down. This hesitancy on both sides will continue until the economy stabilizes and those looking to sell and buy become confident that inflation has been tamed and interest rates will stop climbing. With buyers and sellers both playing the long game, it is unlikely that we will see a significant uptick in the volume of homes for sale this winter, and certainly we will not see the velocity of sales experienced last December 21 to March 2022, moving to more affordable markets. To counter the lack of opportunity to purchase a luxury property in their own locale, there is a trend, mainly driven by the younger demographic who can work from anywhere, to move to a new market. This trend is not new. We saw it during the pandemic with many buyers moving to Zoom towns and lower-priced emerging markets. In today's market, there are still opportunities for those looking for more affordable luxury homes to move to communities such as these for 2 reasons. Firstly, construction has boomed in many of these markets, opening up new inventory. And secondly, because of the previous meteoric rise in values, properties still on the market are now considered overpriced. This has created a comparatively higher rate of inventory, resulting in an increasing number of price reductions. Climate impacts choices. Another factor influencing decisions in the luxury real estate market is the importance of finding locations that are not negatively affected by climate change. The impact is not simply the extreme risk of fire, flood, hurricanes, tornadoes, or droughts, but the resulting effects such as higher energy bills, risk of power outages, increased insurance, and damage to local infrastructure and amenities. A recent study by Forbes Home found that almost a third of their respondents cited their reason to move was due to climate change, and another third cited looking for better weather for their move in the next 2 years. Similar to the increased movement to more affordable markets, this emerging priority is driven by the younger generation aged under 41 years old. Future expectations. As we head toward a new year, while we expect the luxury real estate market to remain softer than last year, it is important to remember that we are simply returning to a more normalized market. Expect properties to stay on the market longer, prices not to drop significantly, and the affluent to make decisions based on long-term investment. The art of selling and buying in this market needs a critical and analytical approach. Understanding the realities and setting expectations accordingly will ensure that your goals are achieved. So if you're looking to buy or sell in 2023, reach out to us for a free consultation. We'd love to discuss your options and see what we can do to make sure your luxury real estate dreams become a reality.